Get the power to do more with Storable Insurance. More offering, more enrollment, more protection for you and your customers. Storable helps operators do more with the most powerful technology in self-storage. Learn more at storable.com/do more.
So let's get started. My name is Matthew Beal. I'm a product marketing manager here at Storable, and I'm going to be your host for today's webinar, but I've also been your host for the 4 Operator Imperatives webinar series. And before we get into today's content, I wanted to walk you guys through just kind of an overview of the webinar series. So last time we had a couple of fantastic guests on, a couple of operators for a roundtable discussion on the topic of simplifying and automating processes. And so in that discussion, we talked about how you can utilize automation to simplify processes around your business and kind of free you and your team up to be able to focus on providing value back to your business in a host of other ways. So if you did miss that webinar, you can check out the recording at blog.storable.com. You can also see all of our past recordings there. But today we're going to be opening up our last chapter of the 4 Operator Imperatives webinar series. And we're going to be having a conversation on amplifying your operating revenue. And so specifically, we'll be discussing how you can use a combination of revenue management tools and some other ancillary revenue streams, some products and services to make up for an offset in tenant demand and NOI that we've been seeing in the industry. And then lastly, in 2 weeks, we're going to be officially concluding the webinar, the 4 Operator Imperatives webinar series. So we're going to be having another operator roundtable. And so what we'll do is we'll bring a couple of operators on to discuss kind of a continuation of today's topics on amplifying your operating revenue, so that we can kind of hear straight from some of these operators that have been doing a great job of managing their operating revenue. What are they doing? What are some of the most effective strategies? And what are some lessons learned that they've had along the way that you can take advantage of and not kind of trip up on the same thing? And so let's dive into kind of some of the market forces that have led us to this webinar series that we've been hosting. So in 2013, 14, and 15, operators were seeing some really unprecedented revenue and NOI growth. And this attracted a whole lot of developers that were able to take advantage of the fact that they could build at a 9 or a 10 cap rate and then sell those stabilized facilities at a 6 cap rate. And you can kind of see the results of that in the top right corner here on this construction value put in place chart as it just spikes massively. And then as a result of that, we saw the largest development cycle in the industry's history from 2015 to 18. And so we were adding almost 1,000 new builds every single year in this industry. But starting in 2019, we started to see that kind of consumer demand wasn't quite keeping up with that growth in supply. And so operators kind of had to start thinking about how they could be more efficient with both their operations and marketing efforts. The COVID-19 health crisis has really only further accelerated that trend. But we don't believe that that's doom and gloom. As we all know, the self-storage industry has continued to perform incredibly well compared to many other industries during this time, and that continues to be the case. But there are some challenges that remain, and so we created this webinar series, again, the 4 Operator Imperatives, to provide you with a framework to prepare you to combat those market forces and kind of put your business in a position of strength coming out the other side of the health crisis. And so each of these imperatives and their components came from countless conversations that we've been hosting with clients, with vendors, with subject matter experts in the industry. And they're really at the core of how these folks are approaching optimizing both their operational and marketing performance in the face of the market forces. So let's take a look at each of these imperatives. The first is optimizing your marketing spend. And so we spent a couple of months really talking about this one in detail because there's so much that you can do. But we had some conversations on SEO, PPC, listings management, reputation management, and multiple roundtables with some operators to talk about some creative things people are doing in the marketing space. The next was on rethinking the tenant experience. And so we discussed kind of 4 key steps that you can take to ensure that you're meeting the evolving needs and preferences of your customers. We all know customers are shopping more so digitally right now than they've ever done before. We'll talk a little bit more about that in detail because that continues to be a running theme for today's webinar. And then next was simplifying and automating processes. And so the theme here was that, there's a lot of things that you probably spend a lot of time in your day-to-day, you or your management staff. And there's a lot of those things that software can probably automate for you just as effectively, which doesn't eliminate the need for folks, but what it does is it frees them up to be able to drive value back to the business in a host of other ways. And some of those other ways are what we'll be discussing today, which is on amplifying operating revenue. And so in a moment, we're going to be discussing how you can provide some valuable products and services for your tenants to be able to provide ancillary revenue streams, specifically that offset kind of that impact to revenue and NOI that we were discussing a moment ago with that supply and demand dynamic. So one more time, I just wanted to kind of reiterate, all of our recordings for all of these past operator imperatives are available at blog.storable.com if you're kind of curious to see what some of these conversations were. So feel free to give those a listen. But I do want to jump right into today's discussion. So I want to begin by kind of introducing a framework for evaluating at least a subset of the financial health of your facility that's slightly different than what we hear from most operators. Over the last few years, especially from those 2015 to 18, when we had such wild success, operators have had the luxury of almost exclusively focusing on occupancy as a metric to measure their financial performance. Really, it was as simple as long as you had enough tenants renting from you, the rest of the financial equations, the components of the financial equation for NOI just kind of fell into place, right? And when that worked, it made that incredibly easy and simple, but it's really not that simple anymore for all the reasons we just discussed. And so in addition to that kind of oversupply dynamic, it's important to note that there's a variety of other kind of downstream market forces that are negatively impacting your NOI and therefore the valuation of your facility. And so one of those that I want to talk about today is kind of this rise in marketing costs. And so to illustrate that, what you're seeing here is how expensive it costs to bid on non-branded storage keywords. So this is kind of a general view of what it costs to go bid on a Google search results page specifically that everybody sees. So this is not branded words like, for example, the name of your facility. And as you can see here, the costs have really just gone up consistently over the last 4 years. But in 2019 and 2020 in particular, we've seen a really, really big jump. And based on what we've seen in terms of demand on the spare foot marketplace, we only expect this trend to continue. We're seeing very, very similar things to what you're seeing on this chart here. And so kind of the value of an incremental tenant isn't as high as it used to be because of how much you're having to pay to acquire them. And so it's on an operator to kind of find alternative ways to either increase your revenue or decrease your cost to offset that. And that's what today's webinar is about. So how do you go about doing that? In our opinion, it's really a matter of shifting your perspective. And so as I mentioned before, instead of thinking of just your business as occupancy and that is that, operators need to kind of start evaluating it at the tenant level instead of the facility level. So how do you make sure that each incremental tenant is just as valuable to your business as it kind of used to be just by default? So what kind of products and services are you offering to your tenants to ensure that not only is their experience renting from you a great one, but you're also simultaneously maximizing the amount of revenue collected per tenant. And so this shift takes a significant amount of ongoing discipline to get right. And so we do recommend that you each kind of take the opportunity to find the right solution that meets your business. And so the first question I want to just kind of pose to you, there's kind of two ways of looking at the answer to the question. For some folks, they already know exactly what they need to be doing, but they just don't have the time to do it, right? Maybe you've got another business you're running, or you've just got, you're really busy in your personal life, or whatever the case may be. But in that case, you should really be asking yourself, how can you kind of simplify your daily tasks and buy yourself some more time so that the time you do spend on your storage business is really focused on driving that incremental revenue? And so we'll be discussing a few ways that you can do that today. The webinar a couple weeks ago also did a good job of that, where we talked about simplifying and automating processes. But alternatively, there are a lot of folks that do have the time, but maybe they just don't quite have the insight into how to create that incremental revenue. And so we're going to walk you through some of those methods in today's webinar as well. So first things first, though, if you're not using facility management software, now is the time. I think that, at this point, a majority of people are using some sort of facility management software. But we do have some folks that are still kind of manual, pen and paper, run it out of Excel, QuickBooks, something along those lines. And so I want to talk to you why really this is a foundational piece behind everything we're going to be discussing today. And so number one is this concept of efficiency gains. And so today's conversation is focused on amplifying operating revenue, but like I mentioned, it's kind of worth a detour to talk about how you can drive NOI in a host of other ways. So one is reducing costs. So a facility management software offers a variety of ways that you can automate, simplify your existing processes to free yourself up to be able to focus on driving back value to your business in a host of other ways. Because at the end of the day, time is money. It's the same thing, right? And so as we mentioned before, if you don't have to implement new programs today, this might be where you should, start if you don't have the time to do that. So Additionally, is this concept of, what gets measured gets managed, right? We're going to be talking about multiple products and services throughout today's presentation that can help drive NOI. But if you aren't measuring your team's effectiveness at adopting those efforts, or where it's working, where it's not working, then there's a pretty good chance that you're not going to necessarily have a good direction or know where you need to go invest your time and your effort. And then lastly is, many products require it, frankly, or at least are made better by having an integration between these two. So there's quite a few ancillary products that help drive revenue. We'll be discussing them today. But at the end of the day, your facility management software is where all the information about your tenants is stored. And so you really need to combine that kind of data from your software with these ancillary products so that you can make informed decisions and figure out and really target what you need to do to get the most out of them. But in addition to that, there is actually one feature in particular I wanted to call out that's built straight into facility management software that can drive revenue for you. And so this tool is called revenue management. And frankly, there's a couple of other names that you might see out in the industry for this. So just to call out a couple is like variable rate management or yield management. They're all kind of generally discussing the same thing. But we do find that this is one of the most misunderstood concepts in facility management software. Most people just think of revenue management as this concept of knowing when to raise rates on your tenants. And I think that turns a lot of people away from this concept because they're just, they want to make sure that they're not charging too much for their tenants or overcharging, I should say. And while this is true, this is one of the features of revenue management. It's not nearly as simple as that. It can also really be better described as a system for finding the optimal market rates that your tenants are willing to pay for specific units. And so I kind of wanted to walk you through how that comes to life. So in example number one, let's say that your occupancy is above 90%, right? This is the situation that we were describing before. And this means that your tenants likely would be willing to pay more for your services. And your competitors are probably already taking advantage of this. And so you always want to reserve kind of a few percentage of occupied units to find that sweet spot. If you're at 100%, then you're definitely charging too little and you have an opportunity. But your facility management software in this case, this is where automation can help you out so much, is that it can help you automatically manage this. And so you can input certain thresholds of occupancy, such as in this example, being over 90%, that allows your software to automatically adjust your rates up. But the reverse is also true. So let's say that, at a certain time, your occupancy starts dropping and it goes too low. So in this case, below 80%. That's a pretty good indicator that you're charging too much for your services, right? And so your competitors, again, probably already know this. I think most folks are probably Googling their competitors and their prices at least on a weekly basis, if not more frequently. And so they're being able to attract people because of the rates that they're offering compared to yours. And so in this situation, you can input occupancy thresholds below 80% in this example, where your software will automatically adjust your rates down. And so between those two concepts, really, again, what it's trying to do is find that optimal rate, that sweet spot in the middle. And so it's going to find that rate that makes both the most sense for you and for your customers. And it does so without even you having to lift a finger. But then let's assume, just as one other example here, is that your occupancy rises again above 90%. So I think at this point, what you want to really do is you want to evaluate the rates of your current tenants as well, not just your street rates or what you're offering new ones. And so, for example, maybe a tenant signed up with you and they were paying $100 a month for their unit, but now that same unit, because again, your occupancy is above 90%, is commanding $120 a month, and you continue to attract tenants. So in that case, revenue management can adjust them closer to what someone off the street would be willing to pay. And so some operators even get more aggressive than this, and they charge more than street rates, knowing that it's painful for existing tenants to move all of their stuff. So just for a few extra dollars per month. But ultimately, though, whether you want to go that far with revenue management is totally up to you. It's up to each individual operator. But either way, again, your revenue management system is just a tool that empowers you with the controls to kind of automatically enforce these decisions that make the most sense for your business, and ensure that you're collecting the most possible revenue for each of your units. All right. But there's also a number of ancillary products and services that you could be offering your tenants that are really a valuable add for both parties, for both you and for them. And so there's also great ways for you to be separating yourself. They are great ways for you to be separating yourself from your competitors. So some of these are passive sources of income, meaning that you don't even need to invest time or money into really getting them going to generate additional revenue. But those that do, where you do have to invest time, they're usually going to give you an even higher margin back, and they're going to directly provide that valuable service to your tenants. And so we're going to take a look at a few. We're going to dive a little deeper in a couple of these, and then we're going to kind of breeze through some other ones because I think you'll get the idea here. A lot of them have the same arrangement. So number one is truck rentals. And so there's a couple of different ways that you can handle truck rentals. One is that you can purchase or lease your own fleet. Number two is that you can become a dealer for some of the top brands, such as U-Haul, for example. Most people prefer the latter. You can do the former if you want to invest in that upfront costs. At the end of the day, if this is a service that you're providing for a significantly longer amount of time, it probably will generate the margins that are worth it. But you have the obvious costs of buying the fleet up front and also maintenance. So unless you're really operating on a really large scale, again, most folks opt to kind of do that latter and become a dealer. And so there's a couple of benefits of the dealer as well. So for example, your tenants will have the flexibility to drop that vehicle off at another dealership in different cities or states. And we all know that storage is a really, really common usage for folks that are moving. And so this can really be a huge value add for those customers if they're moving across a city or state, that they can just drop it off there. And so for these arrangements, you'll typically need to kind of adopt their software. They'll provide you with a software that you need to input the rentals. But again, in exchange, you'll receive a commission for every single one of these rentals placed. Second is cell tower leases. And so this is one of the passive forms of income that we discussed a moment ago. And the really simple idea here is that cell service providers will pay you a monthly fee to install towers on your facilities. And so most of these providers have standard rates that they'll pay nowadays, typically around $1,800 to $2,700 a month. It's worth noting a few of, in some situations I've heard about where this is not a standard rate, and so you still kind of have to negotiate, and it's just one of those things you'll really want to make sure to understand what is the value of that real estate on your facility and making sure that it's worth, your time to have all of that installed on your facility. So yeah, you'll want to do just kind of some research there and really understand what is that space worth. And then lastly is full service. So in addition to providing storage, some operators have opted to also help tenants move or pack their belongings. And so there's obviously a significant operational burden here. And the cost is obviously much higher than some of the other products and services that we've been discussing as a result. But if you would live, especially in something like a dense urban area, so like the obvious example would be like New York City. A lot of operators that are in New York City offer this as a service because it's almost mandatory. There's not a lot of people that have their own vehicles, and going to rent a truck or whatnot is just a difficult thing depending on where they live. And so this can be an incredibly valuable service that, in the case of New York City, it's almost mandatory, but there are other dense urban areas where this can be a big differentiator from you if this is something that you offer but your competitors don't. And so the other two that we're not going to go into detail on, but you get the gist, it's very similar to these three described above, is propane sales or mailbox rentals, whether they're passive or not. And it's just one of those things where you just want to discuss how much operational burden is it going to cost you for propane, for example, versus how much you're going to bring in for each sale of that, but very similar to the ones above. And the other service I want to discuss with you guys today is tenant insurance. And so tenant insurance is another huge operator or opportunity for operators to fortify their NOI. But not only does it provide a valuable service for tenants, it also most importantly reduces risk for your facility. But again, does provide an incremental revenue stream. And so in order to get the most out of your program, though, you're going to want to make sure that you're following three main techniques on tenant insurance. And I guess before I even get into that, the monetization is simple, right? We get a certain cut of each of the policies that you that you get enrolled for your tenants. But you want to make sure that you are then therefore optimizing that rate so that you are collecting as much as you can from this program and what you're investing in. And so number one is training. And so if your in-store manager, doesn't buy into the value of insurance for your tenants, how successful do you think you're going to be discussing it with your customers? And so this is the first thing you're going to want to focus on. And so it's absolutely critical that you provide training to your managers so that they can more confidently and effectively articulate the value of that insurance to your tenants. But number two is expiration tracking. And so, most operators do a really good job of contemplating coverage at the move-in. But what happens when a policy lapses? I think we would all agree this is a huge opportunity for most people. And so it's really important to provide managers and staff the tools necessary to log and to track insurance-related information about your tenants. So if a tenant opts to use their homeowner's policy as protection, you still want to make sure to capture whatever the expiration date is on that policy so that you follow up with them at that point and you be able to understand what their situation is then. So there's a couple ways you can do that, but I want to bring facility management software back into the equation. So that's, some softwares out there will actually provide you tools to either help you do this. So it'll give you, for example, flags and little alerts that pop up when you log in saying, person A, their policy expired today, and it'll give you their phone number and their email address for you to reach out and to make sure that they're still insured. And so if they are insured, that's great. And they can provide a new copy of their homeowner's insurance. You can input the date and start the cycle again. But alternatively, if they're not anymore, maybe they've made a change to their policy, then that's an opportunity for you to enroll them on your own insurance. And so that's again, just another value add for them and a revenue stream for you. And so some softwares will even go as far as to automate that process for you. So again, we're talking about if you don't have a lot of time to focus on these programs, when that date comes, your software can automatically send an email or a text message to them saying, hey, we need a new copy of your homeowner's policy. And if you don't have it, no problem. We're glad to sell you one of our own for, X dollars. And then lastly is reporting. So again, you want to always track your progress. What gets measured gets managed. And so make sure that you have the access to the reporting tools on the health of your tenant insurance program. This kind of information will help you identify kind of where you're succeeding, where you're doing well, and where you have opportunities to improve. So, maybe you have 3 facilities and a manager at one of your facilities is doing a great job and one at the third facility is not. And that's a good opportunity to kind of understand what the manager at the first facility is doing and help train the manager at the third so that you can kind of get your rates all at the levels that you're desiring. And that all starts from performance reporting. If you don't have access to reporting on your insurance program, then you're not going to be able to effectively drive change. And so if you continue to follow this framework, actually, let's see. So on the testing is another thing I want to discuss for you guys today. So, we've walked you through a variety of ways to increase your operating revenue, all those programs and services, tenant insurance as well. But it's also important to talk about how you're going to measure your success. And so kind of continuing that theme of reporting before, you also need to think about this for all of your programs. And so step number 1 is making sure that you're testing. And so you want to be prepared to get scrappy and to quickly implement new products and services in a way that might take a little bit more human-powered effort than normal, because the goal isn't to be perfect here. We don't know exactly what services or what products are going to resonate with your tenants. And depending on where you are in the country or who your tenants are, that might be a little bit different. And so, you want to be close enough that you can get a feel for whether or not something is working up front before you commit to really solidifying and training your managers on how to do something. And then number 2 is measuring your results. So like we've been discussing, you want to test the efficacy of these programs at the per tenant level to measure what kind of impact you'll have on your business. Because again, if you're paying more for each individual tenant, you'll want to make sure that these programs are offsetting that incremental cost of your marketing efforts to make sure that each of these products or services is actually driving value to your bottom line. And then lastly is iteration. So always be iterating. Did you find a perfect fit that, your tenants love and it's making a lot of sense for your company? Then that's great. Spend some time then perfecting that process and, scaling it to ensure that it doesn't take up too much of you or your manager's time. Use things like facility management software to start automating these things. And if you didn't hit the mark, no problem. This is why it was important to just kind of be scrappy and be human powered at first before you spend a bunch of time configuring your software, so that now you can try another approach or move on to another experiment. And so now if you follow that framework for each of these products and services, you're never going to be overwhelmed. You'll always make sure that you're landing on the right fit for you and your business and your tenants. And then from there, you'll be able to offset those market forces we were talking about. And so this concludes today's content. So I wanted to kind of press pause here. We do have a couple minutes. And Alex, I wanted to check in with you and see if any questions came in.
Hi, Matt. Thank you for that. We do not have any questions that have come in yet, but if folks do have one, you can use the question and answer field in there on your GoToWebinar panel to ask those. We'll give everybody just a second to get those in. Matt, one question that just popped in is on revenue management, and based on how the question's phrased, I'm gonna paraphrase it a little bit. What are some of the pitfalls of revenue management, and the risk of maybe losing a customer due to the rates going up, et cetera? And what are the maybe key things that operators should do to maybe avoid losing tenants but still try to maximize revenue?
Yeah, I think that's a great question. What I would say is I'm even going to take a step back from that question, and I will address that directly. But what I will say is, in my experience talking to operators out there, and my role, I spend a lot of time talking about software in particular, facility management software with our clients here at Storable. What I hear is a big concern is you're going to do too much too fast. So for example, let's say that revenue management makes a lot of sense, and you're at 90% occupancy and you're going to raise your rates 15% on existing clients. Well, that might be jarring, right? That might be a whole lot to those people all of a sudden at once, and especially if you don't spend the time to really explain to them why you're needing to raise your rents. So for example, it's so that you can invest in having people on staff to keep the facility clean and safe and all these kinds of things. If you do too much too fast, that can be really jarring. And so the beauty of the facility management software's revenue management tools is that you can adjust what that percentage is that makes sense for your business. And so I would say, just be cautious and start small, and try a 2 or a 3% increase, and then see what comes in. And if you don't get any emails from tenants or any text messages or any calls, or nobody's moving out, then you're probably pretty safe to do another couple of 2 or 3% maybe in a couple months, right? But there's no reason for you to go full 100% and make these really big sweeping changes. And then another one is that you can use kind of your competitors' rates as a guiding indicator there. So if you're not doing this already, you should definitely be just Googling, what are your competitors offering on their marketing websites or on Sparefoot on the marketplace or whatnot, and seeing kind of how much different they are. Because if they are 15% higher than you, maybe you can do 5 or 6% the first time instead of 2 or 3. But if they're only a couple bucks above you, then you don't want to make sure that you're not pricing yourself out of, your own market. So it's really just taking your time, being smart about it, looking what other people are doing, that kind of thing.
Great, thanks, Matt. I do see we are at time, so I'll just pass it back over to you.
All right, appreciate it, Alex. Very good. So yeah, as Alex alluded to, that gets us through. So I did want to give you guys a quick reminder. In a couple of weeks, we're going to be hosting our last operator roundtable that will conclude the 4 operator imperatives. And so we'll be taking today's concepts of amplifying your operating revenue and just kind of seeing what some other folks are doing out there. And again, so that you can kind of learn from their lessons and some of the hardships they've ran into, but also to hear what's worked well for them. And so be on the lookout for an email from the Storable team on that webinar starting next week. And then lastly, if you guys do have any questions that come up throughout the week, please don't hesitate to reach out. We have an email address set up that's webinars@storable.com. And we will be able to follow up with you guys after that and get you guys chase down the answers to any of your questions. But to all of you guys out there, stay healthy, stay safe, and we will see you guys in 2 weeks for our last webinar in the series. So thanks for attending and have a great day.
Get the power to do more with Storable software. More automating, more control, more revenue, more time back in your day. Storable helps operators do more with the most powerful technology in self-storage. Learn more at storable.com/do more.